Okay, so welcome to day 2 of our bootcamp. And yesterday we were just talking about introduction to Forex, what Forex was, and all of that. So, as I said yesterday, what prompted me to join Forex was that like quest for a side hustle, how to make money online. Basically, that's just it. I was very, very curious and interested in anything I would do, like on my laptop or my phone that will earn me money. So I heard about Forex. I saw that it fits like into what I want. I don't need to go outside, start doing something before I can make money. I just wanted something that I could do with my phone online. And that was how I heard about Forex from a friend. And then I started learning how to trade Forex. So I've been trading Forex for over 4 years now. And I will say the journey has improved tremendously. And then God has been helping. So right now, the purpose of this bootcamp I'm organizing right now, I'm trying to build a tribe of elite traders. I'm trying to build a community of elite traders. No matter how long it will take, I still believe that if you guys are consistently learning, if you guys are dedicated, definitely you're going to get to a point where you will see huge success in your trading. You're going to start making consistent money or profit from the market. So that's the purpose of this bootcamp. Then I was explaining what Forex is. Now, Forex is literally just foreign exchange. In fact, Forex is the short form for foreign exchange. So what is this foreign exchange? It's just trading of currencies of different countries. And I gave an example yesterday. I was like, if you're going to travel abroad, you cannot use Naira abroad. Say you're traveling to the United States now, you need to use dollar when you get there. So if you want to travel out, you need to change your Naira to dollar. So you going to meet an Abuki man to say, give me dollars for this Naira. That is you trading Forex. That's just what Forex is. But now, in this case of ours, we're trading Forex electronically over the internet. We're trading it online, not like one-on-one with a money changer outside physically. So it has now been made in a central system online where if you want to trade, all you need to do is to just create a trading account with a broker, then you log on to a trading platform and you start to trade. You get. So that is just what Forex is. It's simply trading of different currencies of different countries. So you can trade US dollar against the Japanese yen. You can trade the Great British Pound, GBP, against the US dollar. You can trade the euro against US dollar. You can trade the US dollar against the Canadian dollar. There's even a forex pair, US dollar against Nigerian naira. I hope you get the concept. That's just what it is. So you just trade different currencies. Now there's what we call a forex pair. A forex pair is you now while when you're trading forex, you cannot just trade a single currency as it is. For example, now still on the Aboki example I gave, you cannot go to the Aboki man and say, I want to trade only Naira, and you give him your Naira without collecting another country's currency. You get? So you're trading one currency for another. You're giving your Naira to collect your US dollar. You're giving your dollar to collect Japanese yen. You're giving your euro to collect dollar. That is how it is. So you cannot trade only one single currency as it is. So Forex is always traded in pairs. That's why we have stuff that Forex pair. So this Forex pair now is a pair of uh, two different currencies. Now, let me go to a chart and show you how it is real quick. So now let's see. If I open this up, this is TradingView, a charting platform where you can actually chart any currency pair you want to trade. So this is watch list. I want to add a symbol. So let me say GBP. It's kind of this kind of loading. But can you guys hear me?
Yes, we can hear you.
All right. So and I hope you guys are seeing my screen. You guys can see what I'm doing on my screen, right? Said.
Yes, we can see.
All right, good. So this is trading view. I just want to quickly show you guys what the forex pair is. You understand? So now, as I said earlier, you cannot trade forex with just one currency. You need to trade a currency for the other. It's either you're using your naira to buy dollar, or you're using your dollar to buy another currency, or you're selling your naira to get dollar. Do you understand? So now this is GBP USD right here. GBP JPY, GBP USD, GBP AUD. So you guys see how it is paired, right? It is paired like this. A currency paired to another country's currency. Here, GBP stands for Great British Pound. This is the currency for England, right? For England, for Britain. So this is the Great British Pound paired against the United States dollar. British Pound paired against the United States dollar. Here, GBP JPY, British Pound paired against the Japanese yen. So there are many different forex pairs. Then they are classified into two. We have the major pairs and the minor pairs. What it is just simply the major pairs are the currencies of the top countries in the world. They are about seven. If you go to babypips.com, I shared that site on the WhatsApp group. These are stuff you can read up in a day, in fact. If you're very serious about learning Forex, you can read up all of these basics in less than a week and you get yourself up to speed with all the basics you get. So there are there are currency pairs and they are divided into two, the major and the minor pairs. And you can even say exotic pairs. Some people classify them into three, some will just classify them into two, but just know major, minor. The major are the major currency of the major countries like the Great British Pound, the United States dollar, Japanese yen, Canadian dollar, Australian dollar, the Swiss franc, and the euro. So there are seven of them. Euro for the whole of Europe, British pound for Great Britain, United States dollar for the US, Japanese yen for Japan, AUD, Australian dollar, CAD, Canadian dollar. All of these things are, let me quickly show you guys something here. So all of these are the major currency, the major forex pairs. Then we have the minor pairs. Those are the pairs of the currency pairs of countries that are not like the top countries in the world, like Nigeria right now. Okay, Nigeria, you can see Naira is a minor pair. You can see which other one? All right, so look here. Major pairs, Euro USD, GBP USD, USD CHF, USD JPY. So when you read about this, you find out that the major pairs are just the currency pairs that are of the major countries in the world, while the minor pairs are the currency pairs that are of the minor or less important countries in the world. So that is just what it is. That is just what it is. So let me not waste too much time on this because this is actually a very simple, basic stuff that if with the knowledge of this, it doesn't even take you anywhere. You have to know all of this before you even start WhatsApp. So this is just a very, very basic stuff. And I shared the link to the website, Baby Peeps. You can actually go there and get grounded in all of this. So that's Forex pair. And then I also talked about where do you trade Forex? For you to be able to trade Forex as a complete beginner, the first thing you need to do is to have a trading account. And you only have a trading account when you register with a broker. So a broker is like a bank. Broker is like a bank that you create an account, but in this case, it's for Forex. So you create a Forex account with a broker. They will give you, then you fund the account, you put money in the account, you fund it with $10, $100, any amount. Then they'll give you the login details of that account. Now, after you've created that account, they'll give you the login details, they'll give you the account ID, the password, the server, and all of that. Then you now use it to go and log into a trading platform. And I told you we have different trading platforms. We have MetaTrader 4, MetaTrader 5. Those are the most popular, common trading platforms. Then we also have CTrader. That one is less popular, but the one you need is MT4 or MT5. That is MetaTrader 4 or MetaTrader 5. It's actually the same thing, just one and an upgraded one. So that is where you actually now carry out the trading, the buying and the selling of currencies. Now, I'm going to open MetaTrader 5 on my laptop. There's also uh, MetaTrader 5 on your phones. So I'm going to share a video on the group on how to use MetaTrader 5 on the phone, so that you guys can watch it and know. That was a video I made myself, so you can watch it and know how to use MetaTrader 5 on your phone. But then when you create a trading account with a broker, you take the login details of that trading account and log into a trading platform, which is your MT4 or your MT5, and then you start trading. So that is the way you're going to trade. And I said yesterday that we have a lot of brokers, and not all of them are as legit as you may think. So there are only few of them that are highly recommended. And I recommended Exness. Exness is actually superb. Fast deposit, fast withdrawal, fast verification, and you don't get to have any issues with them. So I shared the link, a referral link. You can use that link to sign up with Exness and create a trading account to start trading. So that was basically it for yesterday. And today, right now, what we're going to be doing, we're going to dive into the Forex chart. I'll be explaining how a Forex chart looks. And this is where you're going to do your analysis as to know whether you want to buy or sell. You get? Then I'm going to explain what the trading sessions that we have, how to analyze the Forex market to start trading, how to place a trade, other types, and all of that. So let's start with the first item here, a Forex chart. So let's go over to TradingView. So as I said earlier, TradingView is a charting platform. It's a platform that you can log on to. You can just type www.tradingview.com on your laptop, or you can download the app on your phones. What TradingView does is it allows you to view the chart of any currency pair in the world, whatever it is, be it currency pair, commodities, indices, stocks, gold, whatever it is, metals, any financial asset, any tradable financial asset, even crypto, whatever it is, you can find it on TradingView, and you open up the chart to see what the price is and what the price movement currently is. So this is the chart right now, as you can see. So I personally, I trade only one pair. In my journey, I figured out that what worked best for me was when I concentrate only on one pair. And this is what I'm going to recommend for anybody, any day, anytime. When I concentrated on only one pair, I figured out that my trading improved. So I was more concentrated on one, I was more focused, and I was more settled. Instead of going up and down, jumping from one pair to the other, I only trade one pair, which is Euro USD. And this is something that I made up my mind to do after I've watched and seen other traders that do the same thing and have made serious amount of money. There are people that have built houses, bought cars from trading only one single pair in the Forex market. So I trade only one pair, which is Euro USD. And why I chose to trade Euro USD is because Euro USD is the most liquid pair, which means it's the pair that has the most money in it. It's the pair that it is the most traded pair in the world. It's the most traded Forex pair in the world, Euro USD. So this is Euro USD on the daily chart. On the daily chart. So what you see right here is a Forex chart. To be precise, is the chart of Euro USD. So as you can see on the top left here, Euro USD, this 1D means 1 day. It means I'm currently on the daily time frame. And this FXCM is just the broker that offers this chart on this trading view right here. So what you see on your screen right here is what we call candlesticks. Candlesticks. These blue and black candlesticks. These are blue and black candlesticks. So the first thing you see in a Forex chart is the candlesticks. Now, there are two candlesticks, right? And they represent two different things. We have the bullish candlestick and the bearish candlestick. You could decide to put it any color you want, but the basic color is red and green. That is like the basic color for candlesticks, red and green. Let me draw something here. Sorry. Anyways, let me just continue. So I said this right here, this thing you see here is a candlestick. And candlesticks are what is being used to represent price. So if you look to the right here, where my cursor is currently, if you look right here to the right, can you see where my cursor is? You will see this number 1.07752. 1.07752. This is the price of Euro USD. So what it means is that right now, the price of Euro against dollar is 1.07751. So this is the chart, these are the candlesticks, and this is the price of Euro USD. So anytime you're on your chart and you want to know what the price is, this is where you're going to look at to know what the price is. And I told you that we have two different type of candlesticks, the bullish and the bearish. Before I explain the two different types of candlesticks and what they mean, first of all, I want to explain something. In Forex, all that you're trying to do is to predict whether the market is going to go up or whether the market is going to go down. That is what you're predicting. Whether this price you see right here is going to continue going up as it is doing right now, or whether it is going to go down. So when the market is going to go up, what you're predicting is that the market is going to buy. What the market is doing is the market is buying. Then when the market is going down, what the market is doing is that the market is selling. So let me write something right here for you. Up, right? Up means that the market is buying, which also means that the market is bullish. And it's also mostly represented with color green. But I changed my own to blue. But the basic color is green. Even when you check your chart for the first time, you're most likely going to see green. You get? So let's do this. Let's change the color to green. Good. So I don't know if you can see this thing I just wrote right here. Can you guys see this writing I just did? Adams, can you hear me? Then let me write for bearish. Then down equals to selling equals to bearish equals to color red. Okay, so this right here, guys. Adams, can you hear me? If you can hear me, please respond. So, Forex is basically just you trying to do either of these two things. Predict whether the market is going to go up or whether the market is going to go down. If the market is going to go up, what is happening is that you're predicting that the market is going to buy, which also means that the market is going to be bullish. So whenever the market is going up, it means that the market is bullish. Then, if you're predicting that the market is going to go down, the price is going to go down, it means that you want to sell or the market is selling. And whenever the market is selling, it also means that the market is bearish. And it's usually connoted with color red. So these are the two most fundamental basic things that everybody is trying to do in Forex. So you're trying to predict the direction of the market, either it's going to go up or down. If you're predicting that the market is going to go up, then you're going to buy, or the market is buying, or you're going to be bullish. So another thing is this can also be, this is also, you can also call this long. You can also call this long. Then you can also call this shorts. So if you're buying the market, it can also be called you're longing the market. If you're selling the market, you can also call it that you are selling them or you're shorting the market. So this is the two most basic stuff that Forex is all about. Buying or selling, market is bullish or bearish, and the colors for the candlesticks are usually green or red. Then it's either you're longing or you're shorting. But you can customize the color of your candlesticks to mean whatever, to whatever you get. So in my case right now, my bullish candles are blue, while my bearish candles are black. So anytime that the price is buying, that the price is going up, you see that the candle is going to be blue. Anytime that the price is going down, you see that the candle is going to be red. And it's going to be black in my own case because I've changed the color to black. You get. So that is just what it is. That is just what it is. So these candlesticks, the as the price is moving, the candlesticks are forming. As the price is moving, the candlesticks are forming. If this price goes back down and closes down here, you're going to have a bearish candle because it has moved down. The color is going to change from blue to black. The color is going to change from blue to black. So um, a candlestick, let me try and draw a candlestick here. Let me try and draw a candlestick. Anyway, this candlestick had me. Anyways, but let's just assume that this is the candlestick, right? Let's assume that this is the candlestick. Let me see. I want to add the wicks. The candlesticks, I want to like explain what a candlestick is and show you the different parts of a candlestick. Anyways, a candlestick is divided into three or two, the body and the wicks, the body and the wicks. So this right here is the body. Let me use this particular candlestick to explain further. As you can see, this is the body. These small lines that are up is what is called the wick, the wick of the candlestick. So this is the body and this is the wick. This is the body and this is the wick. Then you also have the open of the candle and the close of the candle. Whenever a new candle is formed, that's where it opens. Then wherever the candle closes, that's the close price. So for example, this particular candle that I'm on, this was the open price. A candle that is bullish, whenever the candle is bullish, that means the candle bought, right? The open price is going to be below, the close price is going to be up here. because it went up. How do we know that it went up? Because of the color. The color is blue. So I know that this candle actually went up. So the open is below and the close is up. This one that is black, it means that the open is above here and the close is below here. Why? Because the candle actually went down. So that's why it's black. So that is just what a candlestick is, and the most basic explanation about what a candlestick is. It's divided into two parts. You have a body and you have the wick. And then you have a bullish candlestick and a bearish candlestick. A bullish candlestick means that the candle went up. It means that the candle was buying to the upside. While a bearish candlestick means that the candle went down. It means that the candle sold to the downside. And it's usually green and red. But you can also change the color to anything you want. So that is that for that. Then the next thing I'm going to talk about is time frames, right? So whenever you are on a Forex chart like this, you can be able to view the chart in different time frames. If you check up here on my screen, you will see that the time frames on the chart could be monthly, weekly, daily, 4 hour, 2 hour, 1 hour, 30 minutes, down to 1 minute. In fact, it can even go down to 30 seconds seconds time frame. So that is what a time frame is actually a snapshot of price in different times. Now, I'm on the daily time frame right now, right? Let me go to the 4 hour time frame. You will see that the candles will just change a bit, but then if you look at the price, you see that you're still having the same price. Now, what's the price? 1.07755. If I go to the 2 hour, it's still going to be the same price, 1.07755. But then what these candlesticks are saying is saying that in 2 hours, this was price movement. So in the past 2 hours, price moved down a bit like this. In the past 2 hours, price moved up here. The last 2 hours, price moved up here. You go down to 1 hour, the same thing. So in the past 1 hour, this was price movement. So candlesticks or time frames, they show you the price movement in a particular time, how price moved at a particular time. So they take, whenever that time elapses, the candle will close and a new candle will form. Whenever that time elapses, the candle will close and a new candle will form. So that is just what time frames are. You can go to even 1 minute time frame. You see that the candlesticks are going to be smaller because each candlesticks form in 1 minute and it's showing you how price moved. So you can use these different time frames to kind of like to you can use these different time frames to analyze price and see how the structure of the market is and know when to place your trade or how to do your analysis generally. But this is the 1 minute. You can see that the price is still the same thing, 1.07756. So this is about time frames. So the next thing we're going to talk about is trading sessions. So trading sessions in Forex trading, there are different sessions by which traders trade. First of all, you need to know that the Forex market is open 5 days in a week, 24 hours in 5 days in a week. The market is open from Sunday night and it's going to close by Friday night. But basically, you just trade from Monday, Tuesday, Wednesday to Friday, Mondays to Fridays. But on Mondays, the market doesn't open like Monday gone. It opens Sunday in the night when it's almost entering Monday, around 10 p.m. Sunday. Then the market opens. So the market like opens 2 hours before Monday. But it's basically open for 5 days in a week during the weekdays. And on Mondays to Fridays, the market is open for 24 hours. The market is open for 24 hours. So then trading sessions. We have three basic trading sessions. We have the London session, the New York session, and the Asian session. What is this session all about? These are those the different times that these big countries wake up to trade, that these big countries trade. So the London session is usually in the morning from 7 a.m. to 2 p.m. And that is when in London, in Britain, in England, right? When people wake up to trade. So that is why it's named London session. Then we have the New York session. It's from 2 p.m. to like 7 p.m. in the evening. So that is when money that is when like they don't break for America. So that's when you have the highest trading activities of Americans. So that's why it's called the New York session. Then the Asian session is from 7, 8 p.m. in the night till 6 or 5 a.m. in the morning. So that is the Asian session. And that is when the Asians are usually up and are trading. So that is just it about trading sessions. It's just when the the major uh, continents are up and are trading. So that is why it is labeled London session. So if you're a forex trader, you need to know it's very important for you to know the different trading sessions because that is when the market is very volatile. That's when most people are up and trading. So you get to see more volatility in the market. You get to see market move more during those trading sessions. So you need to be cautious of those sessions so that you know when best to trade, when best to place your trade. So that's that about trading sessions. Then the next thing is how to analyze the forex market. The Zoom call will end in the next like 2 minutes, 30 seconds. When it ends, I'm going to share another link. You can rejoin for us to continue the class because usually after every 30 minutes, if you've not upgraded your Zoom, the class will end. So the next is how to analyze the forex market. Now let's go back to the chart. Now this is the chart. If you wake up in the morning as a forex trader and you want to trade, what you need to do first is to ascertain whether you want to be buying or you want to be selling the market. And that is where analysis comes into play. So analysis simply means you trying to ascertain whether you want to buy the market or you want to sell the market. You trying to ascertain whether the market is going to sell or buy. You trying to figure out the direction of the market so you place your trade and make a profit. That is just what forex analysis is. And we have two different types of analysis. We have the fundamental analysis and we also have the technical analysis. It would be nice if you have a writing material or something to just jot down so that you can come and read it later or just to remind yourself of all of these things I'm saying. So analysis, as I said, is divided into two. You have the fundamental analysis, you have the technical analysis. Now, what is fundamental analysis? Fundamental analysis is when you are using real life events to predict the movement of the forex market or of the forex pair you are trading. When you're using real life events, real life economic and political events, real life economic and political events to ascertain or predict the direction of the market. So all you're trying to do in forex is to predict where the market is going to go. If you predict that the market is going to go up, you buy. If you predict that the market is going to go down, you sell. So the meeting will end now, and I'm going to create another link so you rejoin again once the meeting ends. So let's just wait. Once the meeting ends, I'll create another link and share it to the group so that you join again, guys. So we're going to continue from how to analyze the forex market.